All right, good morning, good morning, good morning. Good morning, everybody. Good morning, Adam. Good morning, buddy. Good morning, James. Jim, Matthew, Mike, Pat, Safe, Steven, Defita, good morning. All right, guys, we got 1 minute to the cash market open, and what we have right now is just a continuation of the selling pressure. The 200 and the 100 are in sync on the short side, and we have harmony zone number one, which is 70 by 80, 95 by 505, or harmony zone number two. Those are resistance area. At 495, actually, we have Globex bands as well. That is. Um, Holds up as resistance. So there's a lot of overhead resistance coming up in this market right now. I'm gonna post some orders just to kind of see where we at. Hold on. Yeah. All right, so that's an order out there. I mean, I wouldn't be surprised if we get a little bit of a pressure to the upside uh, since we sold off so much overnight. So I'm gonna be anticipating some of that coming up. I mean, the market has been very decisive and short overnight, and most likely we're going to see a little bit of short covering coming up. Here we go. We're testing harmony zone number one. Yeah, Forex. Here we go. All right. So as far as news coming up, we had unemployment claims, so that's out of the way. Now we have in 15 minutes final services PMI, and that's pretty much it. And we have crude oil inventories at 10 o'clock. Since we had a shortened week, that's going to be on today. Yeah, we're going to see a little bit of a rally coming up here. So just brace yourself. Yeah, we got a shift in the clouds. We have a switch trade. We have a railroad. They're going to push this thing. I mean, I get that. I mean, if we when we break the 84, the market is going to disconnect, meaning we're no longer decisively short. Now it's a two-sided market, and rallies become a little bit more pronounced. Here we go. Good morning, DJ. Good morning. Let's see here. 67. 67. Yeah, you don't want to break 67. Yeah, okay, 67. All right, so they're coming back in. Okay, I get it. I get it. $79. Okay. All right. All right. So I'm gonna look for an entry point. One here and one at 71. Let's see if I can get in. That's that's a nice one. Damn it. All right, that was a nice one. That was a nice one. I could have gotten that 15, 17 points actually if I just been patient. But they paused it though. They just paused it, which I was like, okay, I gotta get out before they flip it back in. A little bit of patience would have paid, but and actually there was an opportunity for me to add to it at 483 and a quarter. I passed on that one. Let's see here. All right, let's see if we can get in again. So what do we have right now? What we have is the two-sided market that we talked about, an opportunity to go long, which we took advantage of on a scalping basis only. We are tossing around between harmony zone number 1 and 2, and that's an area really for to accumulate shorts against that harmony zone number 2. So we need to be very careful here of trying to get long, unless we start breaking above 505. If the market breaks 70, then you're breaking harmony zone number 2, so rallies become shortable again. And on a swing trade basis, you really need 60. 60. 57.60. See that 70 right here? I mean, that's going to be a critical level. Thank you. Thank you, thank you, thank you. Boom. That was a beauty. That was a beauty. That was a beauty. That was a beauty. All right. Here we go back in. This market is, let's see what they're trying to do here. I mean, they're chopping people up here, which I understand what they're doing. I mean, we had a massive move overnight. And then they're testing harmony zone number 1, tested harmony zone number 2. They're in this trend, they are in this zone, which is the neutral zone, and they keep coming up back and forth, chopping people up. So it's a digestion phase in this market this morning. We just need to kind of read through it. We took 2 trades, positive, and let's see what else we can do here. 74, 75. Okay. 70. So those two trades that I just took, I think one for one contract, that's the first one, and those two trades that the two contract trade that I took. So we're starting off at 662, and let's keep working. Such a chop fest, right? Yeah, you guys be careful. Let's wait till 9 o'clock and see what this market is all about. I mean, you really need to kind of break 93 in order for momentum to start stepping back in, and 505 is going to be a critical level. Okay. So there's a lot of coiling going on here in this market. See the resistance up at that 94, 98 is a compound resistance, meaning that there you don't only have harmony zone number 2 as a resistance area between 95 and 505, but you also have the Globex band as a resistance zone as well. So that's why you're seeing this peak, lower highs, and this coiling behavior that the market is doing. Plus we broke this channel, by the way. Excuse me. Yeah, look at that. We're and what's the 100 NT Renko back in sync right here. So let's see if we can find ourselves a short on a rally here. 68, 70. Let me see here. No. 1, 2, 3, 4. 70. Okay, let me see if I can be effective here. All right. Thank you. I'll take it. I'll take the scalp version of it. Basically we're bouncing between targets. So I'm taking it when it gets to one target and unloading it when it gets to the next target. So that's what's going on here. You see, they keep bouncing. So I mean, the momentum here is not like super directional. I mean, they all what they're doing is just giving us pockets. So there's a pockets of buyers that stepping in, pockets of sellers stepping in, and they're just, you know, they're all taking turns, and that's just a sign of a market that it's you know it's trying to find a true direction. But I rather be short than long, as long as we continue to trade under 500. Now, Mike, you asked a question. Is that a Globex zone meant market undecided? No, it's okay. So let me show you what that is. Here we go. See this purple zone right there? That's a zone. When the market gets in it, it tends to bounce between the high and the low end of it, and then trade around Globex. It's another sign that the market is overall undecisive. But whenever you get to the bottom of it, you tend to get into a resistance. Uh, if you're coming from the bottom to that zone, if you're running above it and you come back to it, this tends to be support. So that's an area of that I need to kind of be uh, aware of. Now, whenever you get a harmony zone along with the Globex band, that makes it a bigger resistance area, if you want to think of it in those terms. So the fact that we came up here multiple times and sold off was a testament to the strength of that sell pressure and that zone. I mean, eventually it's going to have to give. It's you run against it and it becomes resistance. But if you keep hitting it over and over and over, then eventually the market is going to break out. So it's gonna continue to be resistance till it's broken. And what we're seeing right now from this market is this behavior of I sell a little bit, I rally a little bit, then I sell, and it just it's a salad and nothing. So we got 7 minutes to the top of the hour. Yeah, good job, Bill. Good job. Yeah, I mean, it's two sided market. You're getting a bit a bit of it on the long side, a bit of it on the short side. Yeah, no problem, Bill. Good job, bud. Yeah, it's not a. It's yeah, that's what we're saying. To be expected. I mean, just let's take a look at the bigger picture here, right? So I mean, you're getting a market that's walking down, and we had a big move from 17,000 what 20 all the way down to 16,450. Now, if you guys remember yesterday when we were talking, um, let's talk about the daily here because that's important, right? We talked about that. We talked about this coming to the middle of the range as a reversion to the mean top of trade. So once you get to that level, you are going to get this bouncy market behavior. Okay, because the market is just trying to defend the middle of the range. So you're gonna get pockets where the buyers are gonna step in, the shorts are they're gonna try to come in and counter, and you're gonna get this boom, boom, boom back and forth. So I just need to be aware of location on the daily. Okay, if we break anything above Globex today, we will get a severe rally back up. So that's gonna be the pivot point that we need to be looking at for the remainder of the day. So there's two levels, the 95 and the 545. Those are the two areas in which if we start breaking above, the longs are going to come in a serious way. And if the market keeps doing this and keep trading under those levels, then the push lower is going to accelerate as the day goes. And some of the potential targets on a swing trade basis on a daily is 417 and 326. So where we at in the day is going to be critical. See, I mean, this is the second or the third time. I mean, one, two, three, and this is the fourth, fifth time that we come up to that level and just get faded. There was a captain set up short. I didn't see it on the 40 NT Rinko. Yep. Let me see here. Did I just screw it up? Yep. Damn it. Question: why do I call it captain setup? I mean, that's a term I coined a long time ago, and it is what you're looking at is it's a coiling behavior, and it's a capping behavior because whenever you see this, um, it looks exactly like this. Since we're not, let me see here. Okay, yeah, that's one of them, but let me show you one. Okay, give me a sec. Give me a second here. I'll explain it to you. All right, all right, all right. Let's focus here. Let's focus. Let's focus. Yeah. Okay. We'll talk about those two things in a minute. Um, so we're gonna talk about the support and resistance on ES for you, Abe, and also on those captain setups and what they mean and how they look and why do we call them captain setups and all that good stuff. But right now, I need to be hyper focused on making money. So let me just get some more money in here, and toward the end of this session, we'll go back and discuss this. So Abe, you have a position. So okay, we'll talk about that one quick, since you have a position. Oh, here we go. Okay, yeah, I thought I screwed it up. Okay, here we go. Okay, so that's the captain setup that we're talking about. So whenever you see this a four candle formation, it typically what you're seeing is a capping behavior. The price is getting capped from going higher at that moment, and you're gonna get that push. Okay, so that's usually if you run up to it and you produce a captain setup, that's a resistance. When you run down and then you produce a captain setup, that's a support. This is another one where you have a captain setup short. Look at that. I mean, that's like a beautiful captain setup with a switch trade. So that's just a behavior in which uh, you're getting a capping behavior. So I thought about it. I was like, okay, well, I'm not gonna call it capping. I'll call it captain. So just came up with that. So that's that where that came from. What we call the higher low red bar, right? I mean, are you talking about higher low red bar? Oh, this one right here, correct? Is that what you're talking about? That's called switch trade. Switch trade. Okay, so let's see here. That's called switch trade. Yep. Those are another powerful setups. And they can work as a continuation trade. They are also, depending on location, like for example, this right here was a continuation to that short behavior. And yeah, those are very powerful in the right location. So you enter typical on captain bar closing on the fourth candle. So on the fourth candle on a captain setup, that is typically the entry. So here we go again. This is the, what is that? Um, 1, 2, 3. You got 4, 5, 4, 5. This is the six times that we come up into this zone and reverse. 70. So yep. So it's 9 o'clock, 9:04. And what we're noticing here is a couple of things. The longs are getting more persistent. The the fact that we have a switch trade right here, most likely the market is going to resolve itself above 505. So I'm expecting these pullbacks to hold against that 658. So what you're seeing is the revving up of price action to the upside. I mean, we're hitting this resistance area, so it ain't gonna be like running through butter, but I'm expecting the longs to be persistent. Okay, let's see here. 1, 2, 3, 4, 5. Okay, 81. Okay, so we don't want to see 81. So we got very close to that 505 that we talked about. We hit Globex band and Harmony Zone number 2, and resistance showed up. Okay. Nice, nice, nice. Here we go again. Another attempt at that 505. There you go. Uh, 545 is Globex, Adam, and that's where we're heading to right now. It just they will tend to fade it as we approach that level. So you have a target number 3, which is 533 and a half, and that would be a good spot for for an out. Hey, Brian. There you go. There you go, Adam. I know, I know. You had to kind of be patient with that chop fest, Adam. I mean, we could tell where the market was just kind of too choppy. But anyway, I'm glad you're back on the winning streak here. So that's 505, 515. Hey, Brian, happy New Year's to you, buddy. This is going to be a great year, right? All right, so they put a captain set up short right here. Okay, so there's a bit of resistance coming up again. Right now we're in the spot that, for the swing trade long to start taking hold, we need to break above 520, right? So that's the key to this move. And, we're seeing the longs being aggressive. Okay, so they put a pocket here. I mean, the key to the longs is not to break under 494. That's the key. If we break under 494, we're gonna dip in back into that range and start consolidating a little bit more. So and this is the bottom end of the Globex band and also Harmony Zone number 2. So there is, they're trying. The shorts are trying. They're trying. Okay, that's a switch trade. That's good. That's good. The longs are still here. Okay, that's good. Here we go. We should close above that 520. Here we go. Boom. All right. So on a swing trade basis, now the market has a target of 545. We have a support zone harmony zone number 1, which is 495 by 485. Zone number 2 is 470 by 460. We'll reevaluate the longs if we break anything under 470. Pullbacks are buyable in this market, uh, and we should be expecting some pullbacks coming up. One, two, three, four, five. Yeah. All right. Target is 450, 545. Okay, and then we have a target ahead of it, which is the 533 and a half. That's coming up soon. All right, let's take a look at ES right here. So we had a reversal on ES, one candle reversal. Fine, great. You have harmony zone number 1 and 2, which is 50 by 47, 43 by 40. Those are support areas. And our target is 47.62 and a half. So that's what we're looking at for ES. And if we take a look here, we're looking at a pullback. Yeah, and you should be expecting a pullback. They broke Globex. Most likely they're going to come back and retest some of it, maybe to target number 2 or the 751. And there we need to see how well they hold on to a higher low. And if they hold on to a good higher low, then we can see a second rotation back up toward 47.62 and a half. If we break anything under Globex, we still have couple of areas where the market can defend it, the 47.48, and finally the entry point of 47.45.72. You don't want to see that really, but those are also two areas where the market can defend this long pressure. But our target is 47.62 and a half. Pullbacks are buyable in both ES and NQ. Here comes that target number 3 at 533 and a half. And that target is hit. Next target is 545 and a quarter. Yeah, make sure you take your money, because we talked about how they tend to fade as we approach Globex. Okay. Yeah. We're starting to break channel number 1. So, the market is pausing here. It's anticipating Globex, and some traders are coming in and fading. So, just be careful of being aggressively long here. Oh, good job, DJ. Yeah, that's a good target considering where we at. You know, we're coming to Globex. They'll take that target number 3, pause and pull back. So I'm glad you and Adam took profits right there. Yeah, whenever you have a disconnect between the indices, DJ, I mean that tells us that the market is you're gonna get a lot of consolidation across the board. You're gonna get one moving, the other one is not, and basically they will just some traders will trade like NQ based on ES, and a day like that, where they'll struggle with that idea, and you typically, whenever you have different indices that are not in sync, like okay, if ES is weaker than NQ or NQ is weaker than ES, that they you're not gonna get a huge up day or a huge down day whenever you have a market that's like that. They're putting a captain setup short right here, so expecting a bit of a push lower to maybe retesting the 500 that's coming up right now. Here he goes, 500. Broke channel 1 and 2. That's to be expected. I mean, you don't necessarily want to see anything under, the 485. Yeah, see, that's a retest of it too. So yeah, they're gonna push the market lower here. So we hit the 505 and the 500. They put a captain setup short and a retest of it. So we should be in this area here around that 85.95 soon. See that 30 exit looks pretty nice right about now, huh? Come on, come on, come on. I mean, I like the way this is moving. Look how, we hit the 30, we understood that target. You're getting a captain set up short, then you come in and retesting it. Then it's making a lower high. You're coming up to this zone. What is that telling me? That tells me that we are experiencing a pocket of selling pressure that's coming in. But we're coming into a support area, which is harmony zone number one at 495. We need a break above 520. If that happens, then we can start looking for longs back again. With a target all the way up to 545 and a quarter. If we fail to go to 520, then you're gonna most likely get a deeper pullback that could take us to the 80s. I mean, if this is important, if we break anything under 500, not 500, hold on, 594, 494. If we break under 494, that will disconnect the market, meaning that we no longer have exclusive long market. So the defense that we're seeing here is critical. All right, so let's see if we can get a pullback. We should see a run. I mean, I know they're playing games, but as long as we continue to trade above that 500, we should run up. We understand the 94. We understand the 500. I understand this dip that they're trying to do. We should be bursting up above 520, and if that happens, you'll see 25 and 30, and then they're gonna pause it there. They're trying to scare people, but that's what they're trying to do here. Watch it, just boom. Here you go. $594. Those are the two areas that we need to protect. Same to you, Matthew. How we doing today? Yeah, I know. I see that, DJ. I do see that. They're playing a game. I get it. I mean, the key is 500 and 94. I mean, they're tossing it around here. I mean, they're putting a small channel, but this is a weak channel on the downside. Like really, the expectation here is to see that burst of energy back up to 20 and then boom to the 30 level. But I'm not gonna commit to it here. I'm gonna understand what it's doing and read it. I mean, that's the channel that we are in right now. So if that 500 and the 94 breaks, then you got that attempt at 85, and we'll see how strong they are. But they're just struggling here. I mean, that's just the obvious thing. Like, they shouldn't be spending that much time just trying to figure out this thing. I mean, you have a 200 and 100 that are in sync on the long side. We're in the middle of the range on the 100 NT Rinko, and we made that high on that 30, and now we're making lower highs. The bias is long, but there's that pocket we are in right now that is just a bit tough for the longs to take over. So they're trying to digest it. I mean, I'd rather be looking for the longs against the 94 and the 85. Yeah, like right here, you don't want to see a switch trade at 507 because that will pull the market lower. So they're really right now they need to be punching up and go into the 519.20 right now. That tells me the market is long. Here you go. Yeah, it's a meat grinder right here. Yeah, see, like right here, they should not be doing this. They should not be. Yeah, if we break 507 again, 507.75. If we break 507.75, that's gonna set the stage for a deeper pullback. So those were one of those things: 707 or break the 20. Break the 20, we'll go higher. Here we go. That's it right here. We should be bursting. Oh, it's the weirdest market. Break the 20 or break this 07. Yeah, that's not good. Yeah. Here they come. There they come. Captain set up short on the 30 NT Rinko. It's a multi-captain setup short. It's a six-prong captain setup. So the push here should hit 500 and the 90 soon against that triple top behavior. So you had the high at 30, you have this accumulation distribution, uh, well, actually more distribution than accumulation, um, right here. So we should see 590. It is too choppy for me. I'm more of an observer here. I want to make sure that mentally I'm connecting to all of this. Like my expectation here is to see a burst of energy above 20. I mean, as long as we don't break under 500, that is my inclination. Is break the 20 and go higher. Don't overcommit, Adam. Don't overcommit here. And definitely don't overcommit with size here. It's an undecisive market. If anything, buying the pullback with small amount is paying you, like small number of contracts. Just small number of contracts. You break the 20, then you could add to it. There you go. Come on, baby. So we're breaking that captain setup short, which is a good thing. That's going to be the catalyst for that push. Hey, Adam, I sent you a text, man. Take a look at what I sent you. Hey MKO, how are you, buddy? Here we go. Here we go. Switch trade right here, and then they're gonna boom. Gonna boom. That's what they're gonna do. So we got to that 30, and we said, okay, they're gonna do this number right here and run up to that 30 and pause a little bit. But ultimately, the longs are still holding on the narrative, even if it's a little bit choppy. Like right in this zone, they chopped it up, but the bias was long. You had the 200 and the 100 were in sync on the long side. So that got us to be thinking in terms of a long. You had that support area in the form of a harmony zone and the bottom end of Globex band. That's another area that used to be, resistance, and now became a solid support. So we understood that. We understood that the trend line is long, and this was a very shallow sell pressure. So the expectation is the target of 545 and a quarter on pullbacks. That is ultimately the target and what we're looking for. Okay, so across the board, it's almost 10 o'clock here. Where we at, everybody? Abe, Adam, Brad, DJ, James, Jim, Matthew, Mike, Safe, Sheila, Steven, Tafita, MKO, how we're doing? AVS, Brian, Bill. Where we at, everybody? Okay. That's okay. That's okay, Adam. That's okay, man. Let's get back at it. We have 249 days left in the year. Just make sure you're improving and recognizing these areas and how to handle them. So this way they don't become an obstacle to you. Steven is 90% winner and up money for the day. That is good. Jemiah is up 700. Okay, that's good. Good job, DJ. That's a big day for you, man. Okay, Brad, the day is young. The day is young. Here we go. We got MK up 1300, Bill up 1500. Okay, that's good. That's good. Just keep working. This is where I'm at. I had, I think, 3 decisions. Yeah, I had this decision, and a decision with 2 contracts, and a decision with 1 contract. So we're up 823 for the day. ES long, I mean, it's behaving in similar fashion to NQ, even though there's a little bit of discrepancy. So we're looking for 4762, 4762 and a half as a target. And here comes our target in NQ. It's lagging. Well, actually, it's not lagging because we're breaking above Globex. So it's actually leading NQ. It's just not a lot of movement in ES right now in comparison to NQ. But the longs are the dominant force. It's first touch DJ tends to work. You know, they tend to work. 28. Really? 28? 38, 40. Okay. All right. That is messy, guys. That is holy crap. Yeah, yeah, that's what I'm looking at, Sheila. It's just it's just the nature of the market right now. Um, so they got very close to Globex and our target. I mean, we came in within what is that, like 3 points, and that got faded. Typically, first touch of Globex it tends to get faded, either way. Like if you're coming down to it, they tend to buy it, and if you're coming running up to it, they tend to sell it off a little bit. So right now we're getting this like cluster mess of choppiness right here, which really makes me wanna stay away from price action. This is the kind of behavior that tends to be problematic. Um, what will get me engaged? I need to do two things. One, either break 494, okay, and that will get me to be more active looking for the shorts on a scalping basis, or we break 550 and then pull back, providing me with an entry point. That will get me interested. Anything in between, I'm just going to make a choice to absorb more than trading, because that's the kind of environment right here in this box where the market can literally chop people to bits. You're at the bottom end of the Globex band, and you're trying to figure out what you want to do, and it's just gonna be chop, 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 chop. So I just gotta look at it from that perspective and say, okay, you break 550, you're gonna provide me with momentum. Break anything under this 94, the shorts are taking control. Anything in between, I'll just watch. Yeah, I mean the 45er is coming up. Let's go, let's go, let's go, let's go. Alrighty, here we go, here we go. Yeah, this you know, they keep coming up to that level, bringing it back in. I get it. It's glowbacks. It's just not, that's how they naturally trade around these areas. First touch gets faded typically, and price action tends to chop up. But that's our target. It's 545 and a quarter. They need to hit it and close above it. Like for example, if we get here and now we don't close above it, then we break below 520. That's gonna spell some trouble for this market. And I don't think that's going to happen. I think we're going to see a burst of energy higher. Okay, so double switch trade. That be honest with you, right here it should be an entry for a push toward that level and higher. Probably we're going to get about 10 to 15 point run here against that low of 530 530. I mean, if there's any momentum in this market, we should be seeing that happening right now. Okay, so we hit it. That's a good thing. Let's see how far they're gonna take it up. We have a captain set up long on ES, and we got a target of 47.62 and a half. Here you go. See that double switch trade right here was, those are very strong signals. Next target is 570. Next target is 570. Harmony zone number 1 and 2 shifted to 20 by 10 and 495 by 485. We'll reevaluate the longs if we break anything under 505. Pullbacks are viable in this market. And see, that captain setup on ES was a big one. And the minute I saw that, I was like, man, this market's going to go. So you see that captain setup long? Yeah. And then the target of 47.62 coming up. This behavior is long across the board. We hit that target number 4 in this rotation, which is 563 and a half. Our target is 570 and a quarter as well. Matthew 615. 615. Let's take a look here. You're talking about 615. All right. So we have a target here on the 574. I mean, we have multiple targets. The 70, then you got the 74. Then that means that you're breaking out of the high of glowbacks, and in the break you're selling into it, which they tend to kind of break it and fade back. Yeah, I mean, you're playing a bigger swing, and you may get this you may get this thing today. The way the market is behaving, especially after the retracement that we've had over the past three days or so, a run up to 650 is a high probability event. So what they typically will come and do is they'll hit the 90, the 59. Actually, it's not the 590. Let me just see here. Yeah, the 593 to the 600, and they'll fade it. It'll fade it a little bit because that's the top end of the Globex band. Then depending on how they consolidate that, as long as they don't break back down under Globex, then your probability of 615 to 650 is very, very high. So you have something here that could hold into a bigger target. All right, we hit that target. The next target is 595 and a quarter. Zone number 1 and 2 shifted, 545 by 535. Then we have 520 by 510. Pullbacks are buyable. We'll reevaluate the longs if we break under 525. Pullbacks are buyable. Let's go, baby. Let's go. So we hit target number 5 in that sequence. We have target number 6, which is 605, by the way. So as long as we continue to trade above Globex, that's just going to be the key for the rest of that rotation, and we should be expecting a bit of a pullback. But how deep? That's the key. If as long as we continue to trade above that 545 Globex and above that 535 harmony zone number 1, we should, the higher low should support a bigger move to the next target of 595. Then you got the 605, then 615, 650. Those are the 3 targets after that. Okay, so they're pausing it right here, right? And if we look at, we're about to get a captain set up short on the 30 NT Rinko with a break under 70. So we're gonna start retracing back into the 560 and see how well they hold on to the pullback. I mean, ultimately, I still want to be looking for, pullback as a buying opportunity against that Globex 45 and a quarter. I mean, right here, there's an opportunity for a short on a scalping basis only with a stop right above that high of 583. Well, here you go. Literally, as we speak. Sometimes the market is very predictable, right? I mean, that's the captain setup that we were talking about. I mean, that was good for the middle of the range action, and you're getting even more than just middle of the range action. Damn. That was a big one. All right, how's everybody doing so far across the board? Where are we at, everybody? Any improvement? Any more trades? Steven, I'm sending you a message, bud. Take a quick look. Okay. So all right. So what we're seeing here is this breakout and retest, right? The 200 and the 100 are out of sync. What that means that, technically the momentum is off of the market. And we are in a two-sided market right now, where scalping on the short side has potential. You have this captain set up short at that 70 level that we talked about earlier, and that produced. You came and retested that structure, and that held. Now you have the 200 and the 100 out of sync. You also had a captain set up short on ES, so I'll be looking for rallies to short into on a scalping basis, as long as we don't break anything above 75. And I want to clear this area. Like, I don't want to put a trade exactly right here. It either needs to be higher, or the market needs to break and then rallies become shortable even more. But this exact spot, 10 points higher and lower right here. So 45, 55. So this area right here, I want to avoid putting any trades in. The market tends to just literally bounce around and chop. Abe, we're looking for your 2024 plans. Where are they at? We're all excited to see what you have planned for the year. And that goes for everybody else. I mean, share with the whole community what you're planning on doing, and what are your goals for the first month of the year, the first quarter, and the year as a whole. What do you want to accomplish for your trading accounts? People learn a lot from what other people, their thinking process. Well, hot damn. Look at that. Ooh, baby. Uh, I mean, war is over. No. War. I mean, we're at this last line of defense here in this market. You know, it's one of those things where the market right here have harmony zone number two that they need to hold on to, and they need to break above Globex fairly shortly here in order for the longs to reassert themselves. If we end up consolidating in the neutral zone, then selling off below 510, then we're getting a complete reversal in the market. And that will lend itself to a continuation trade that could take us a lot further. So here we go, big picture stuff. We got to pretty much the high. We got pretty much to the high of the Globex session, and the market faded. And that was a concern. And we got very close to the target of 595, and I mean we were about 12 points away or so, and the market kind of came back in a little bit harder, and they put on a captain setup short up here too. So that was the first thing that we found out. I was like, okay, well, there's a captain setup. They should pull it back, and we should see how well they hold on to it. And we broke through the 60, then boom, it just collapsed basically. Thank you, Abe, for sharing your plan with us. I think it's a good plan. I think it has a lot of merits in it. Um, Having a journal that talks about what did you do well, what do you need to improve upon, and what you're going to do differently is going to be very critical to you to measure your own success and what actions you need to take to get better every single day. The sizing that you have in your plan, uh, it's really not as important as you think. It's more important to have your process tuned in, then sizing become a natural progression of a proper process. And you'll find yourself when you're doing well and you're sticking to your business plan that you're adding more size because it makes sense to add more size. So if you look at it at the end of the year and say, okay, I need to be at 4 contracts, you probably get there a lot earlier if everything else is in check. Um, I always tell people you have to always kind of like almost like reverse engineer your trading. You look at what you don't do well and consider that as a hole in the bucket and plug it. So reverse engineer and say, okay, what do I do? What do I do not do very well as a trader? Maybe it could be not taking your stops. You get emotional, you don't take your stop. That's one big thing that does traders in. Then the second one is sizing. Most traders oversize, uh, especially when the trade is not working. So those are two big things. So look at what you don't do very well and say, okay, how do I prevent myself from making that a problem? And reverse engineer it, meaning you put stopgap measures that prevents you from continuing to experience that behavior. So add that into your trading plan because that's going to be very, very critical for you. Everything else looks really good. Yeah, I mean, looking at this, guys, we're boom. Shorts are coming back with a vengeance. So, that market did this thing. Now we're breaking, came back and retested. We're breaking that 10, and that really spells. I mean, like right now, this is the last line of defense the market has. They're just running right through it. So the dream of seeing 615 and 650 is on hold, and if the market gets to 495 and a quarter, then rallies become shortable on a swing trade basis against Globex. So the longs need to come in and need to come in very quickly and break above 550. Otherwise, the destiny of this price structure is going to be 495 and lower. So Hey, it's okay. So you're saying, Abe, just need to reinforce discipline. Also, after every okay, so not taking your stops is a big problem. Wipes out gains of months of gains. Need to reinforce discipline. It's not about discipline. It's because if you it's weird how that works. When we say discipline, it's almost like you're pushing yourself to say, oh, I gotta take my stop, I gotta take stop. But you are better off reinterpreting what a stop means versus trying to push yourself to take a stop, if that makes sense. If you reinterpret what a stop means, most people interpret a stop as, oh my God, I'm losing money. Then their natural reaction is to fight it, because who wants to experience losing money or experiencing the pain of losing money? So what they do is they average down, they add to it, and they start a cycle of emotional reaction. So so you're better off reinterpreting what a stop means. And you could interpret it any way you want to. You could interpret it as a business expense, as, hey, listen, if I take the stop, I stay in business. If I don't take the stop, I will end up getting out of business. And give it a different meaning than, oh my God, I'm losing money. Let me see if I can save it. And that's a good one. Would I hire myself as a trader? Yeah, I mean that's actually a detachment technique that is very very strong. And that's the key, is detaching yourself from the outcome. You know, like it's not personal. It's a stop. It's part of doing business. It's not you have not failed. Failure is actually not taking the stops. Success is you taking a stop and saying thank you, because you're releasing that emotional attachment to that money, and you just consider it. Hey, listen, I'm paying my bills. Stops is part of it. I gotta take it. It's okay. Let's keep working, and just let go of, oh, let me let me see if this trade can work. Let me add to it. I hate for it to stop me, then turn back up. Those are the most frustrating part of trading, is just to put a stop and then get hit, and the market really works in your favor. So redefine what a stop mean versus trying to push yourself to be disciplined, which is really another way of saying, hey, listen, it's almost like you're hammering yourself to not take a stop, but you're increasing your emotional stress. And if you shift that a little bit and say, hey, listen, you don't have to be disciplined if you understand the meaning of a stop, because you'll automatically take it and not even have any emotional attachment to it. It's like, oh, okay, well, part of doing business. Here you go. Hey, I took a stop. Good deal. Doesn't matter. It doesn't matter if it comes back in my favor or not. It's just part of doing business. You don't care. You don't care. It's just on with the next one, on with the next one, on with the next one. Thank you, thank you, thank you. You say thank you whenever the market pays you, and say double thank you for the market keeping you in business and you taking a stop. It is one of the most important things about trading, be honest with you, is that emotional detachment to the outcome. You do not care. You really don't. It's just a process. You just following the process. All right, so where we at for? Yeah, no problem, MKO. Thank you, Jim. All right, this is where we at for so far for the day. So we're at 8:23. These are the trades that we took so far today. We took three decisions up to 8:23. Um, One short and two decisions are actually one long and two decisions are short. Yesterday, after the day the room closed, I traded a little bit more. Ended up having a nicer day. I think we ended up at up almost $400, and I added some more to it into the close, and we had our first day. So far the year starting exactly the way it should, positive, and continuing to trade well. Uh, MK, where you at right now on your payouts? So your plan is for the years to maintain three payouts of 2K each, meaning 6K every 2 weeks. Yeah, that'll be awesome, man. But where you at right now? Well, one thing also, Jim, that I noticed about myself and in many other people that I work with is there's a correlation between your energy level and your capacity to accept market behavior. So if you're starting off with low energy, you find yourself the day with low energy. Like you have not slept very well, or you have a lot on your mind, you're emotionally drained, for example. Then you come to the market and you trade. Your threshold for shenanigans is very low because you don't have that energy to keep you centered and focused on what's important. So the trader tends to make a lot more mistakes and slip their orders or move their stops or do one of many of behaviors that actually does the trader in. But if you come to the market with high energy level and high level of excitement and focus, you tend to stick to your plan. So that is one of those measures that you have to be very hyper focused on you and understand what is my energy level today. Am I focused? Do I feel good? Do I feel positive? um, did I sleep well last night? Am I enthusiastic about being in front of this machine? you know if that is your mental state, you are setting yourself up to succeed for the day and to stick to your plan. But if you come in with a lower energy level, your decision making process will be at that level as well. And you find yourself making a lot more mistakes. So just be very conscious of that. That's excellent, MKO. 8 payouts of 2K, 16 in payouts so far. All right. You're on your way, buddy. Good job. All right, guys, it's past our time here. It's 11 o'clock. And we will see you guys bright and early tomorrow. Tomorrow's Friday. And we will do this again. You guys have a good one. Remember how many days we have left for the year. That's what I keep reminding myself. Let's take a look. Here we go. Boom. All right. So what's today? Today is Wednesday, Thursday, the 4th. Calculate. We have 249 days left. That's so many days left in the year. The year just started. And we are, if you make $50 a day, $100 a day, and you're running an Apex, you are gonna get paid so much money. It's just, so the big idea here is slow and steady, and have a process that works. Keep your emotions in check. Know what you do very well, and definitely know what you don't do very well, and reverse engineer it. Yeah, what's going on, MKO? Go ahead. That is interesting behavior right here. What's your question? So at the bottom right here, they keep hitting the 10 and bouncing back. They're trying to protect it, but doesn't look like they will protect it. That's, what is this? 24. 26. So that's the pullback. Yeah, they're struggling. It ain't gonna happen here. So that the 495 is the problem. 495, we get there, that changes the structure of the market. I mean, what kind of account is it? Is it the 70? Is it a $50,000 account, and you have 72 grand in it? What's the size of the account, basically? I'm asking. So you have 22 grand in that account. So you went balls in. you you went hard and heavy on that one. So good for you. I mean, that's a big cushion, brother. Okay, so I just take take 2 grand a piece. That's 6 grand. That leaves you with a bunch of money left. So you have 22. Leave you with 16 grand left in that account, and just rebuild it back to 22, and keep leaving a cushion in it. Now, you have to understand yourself. I mean, if you're going all in on these trades, and you're taking, for example, 5 grand risk on some of them. Like, I don't know how you're trading it. okay, then you're better off actually drawing money more than that. So like if your volatility is high in that account, you're better off, after the 3 months taking a chunk and maybe leaving 5 grand back in and try to run it back up. If you have very low volatility in your account, then just take the minimum and continue to build it up. So that is the question you got to answer for yourself. You see what I'm saying? Because if you have high value, like if you got to 22 grand in that account in like few trades and you went all in and you hit a very nice trade and you made a bunch of money over a span of a month, for example, then you have a high volatility in that account. Then you need to take more money out of that account than if you had a low volatility in that account. Make sense? That's funny, Steven. Does that make sense to you, MKO? 25% consistency? I mean, okay. I mean, okay, so what was your biggest drawdown in your way to making 22 grand in a $50,000 account? Because you only have, that $2,500 initial, so you passed that, you had a little bit more cushion, and you just ran it up to 22 grand. Congratulations. That's a big accomplishment. What was your biggest drawdown? Because based on that is how you should handle the distribution of your funds going forward. But just understand the concept, like, okay, most likely it's a high volatility account, right? Then your objective is you take the minimum of 2 grand a piece for 3 months. Then after that, you're left with 16 grand. Okay, are you continuing to trade it? If that's another thing, if you continue to trade it, you just have to watch that. And if you still have 16 grand left in that account, cut it down. Take basically 10 grand off. No, then if that's maximum drawdown is 400, are you bullshitting me? Then if that's the case, continue to build it. Just take the minimum and continue to take the minimum, but past that time, after the third month, and this behavior after that 3 months is over, just keep building it, and giving yourself a cushion. But I mean, there's no volatility. You could take more money off of it at that point and not drain the account. I mean, if you're telling me your maximum drawdown was $400, and your largest losing trade is 225, and your biggest run up was 4,300, then carry on. Are you trading minis or micros? I mean, it simply could be, you could be connecting with the market in a very healthy way. I mean, just know exactly what you're doing and repeat it. So what we're seeing here, okay, okay, that's good, that's good. So so basically, this account is a low volatility account, and you're successful with it. Then take the minimum distribution if you need the money, and just keep building it to 100 grand, and just keep taking distribution, take distribution. And if you're treating that account this way, attach it to other accounts. So if those are the metrics of this account, then get a copier, get the rest of these accounts copied to this main account, and just keep repeating that exact same process. Because you're going to duplicate your success across those multiple accounts. Anyway, guys, that's it for me. Good day, good year so far, and let's just keep working. You guys have a good one. Good job, everybody. See you Friday.